Wow, those markets in the last couple of days have been very interesting. The banks took off yesterday.
Yeah, actually, I'll be honest with you, Pete, that's not probably surprising. The reason I say that is if you have a look at where the banks, particularly ANZ, Westpac and NAB, have been over the last 6 weeks. They've been trending down anyway from the Banking Royal Commission, but they really have been sort of, beaten down quite heavily on the coronavirus issue for obvious reasons, but also because you've also just had this whole idea that they're carrying a whole heap of risk, the fact that we know significant amount of Australians are having their loans deferred. So they got down to a very, very depressed price. I think you're also looking at it from the point of view that not only have we seen the issue with the Treasury Department's 60 billion expectations around spending, there's probably been an overdone number on the amount of Australians that are actually deferring. Now, banks are much more up to date with what they're doing in their own books for obvious reasons, but it might not be as bad. So the fact that it got so depressed, sort of $15 to $17 in those three that I mentioned before, is something that we haven't actually seen since the GFC. Like it's that low in terms of how much they are moving. Don't get me wrong, they've still got a lot of headwinds to come ahead, but that's part of the reason the banks took off yesterday and probably likely to do so going over the next couple of days. If you look in the US, part of the reason why they continue to do what they are for the last couple of days is their banks are exploding. So something like JP Morgan, you look at Citigroup, you also look at Wells Fargo, they've actually been moving about 5% in the last 2 or 3 days.
Evan, private capital expenditure, the most important release of the month. Why is that so?
Yeah, so look, it's in our world, it's huge, and you don't normally talk about it at all outside of it because it's two things. So when we look at GDP, it's consumption, it's government spending, it's net exports, but the other part of it is private investment. So this is the best way to look at it. The ABS produces this report. The RBA watches this incredibly closely. It shows you two things: what was spent in each quarter. So they also give you an estimate of what they expect to spend over the forward estimates. So that's 12, 18 and 24 months. It will mean that we know and it can understand what Q1 GDP will look like from private expenditure today. We know it's going to be down. The interesting thing, obviously, it's going to have the bushfires and the very, very start of the coronavirus on the tail end, but it also has future intentions expenditure. Private expenditure at the moment is absolutely in the doldrums. We know that. You've seen the record lows that have ever been printed by something like the NAB business confidence numbers. So the private capital expenditure numbers today are that important for that reason, because the RBA is going to be judging from this how much effect it's having, whether or not it needs to have more impact, how the economy as a whole is going from the private sector space. And that's why today I believe the private sector credit numbers are so important.
Okay, Evan Lucas, always good to get your thoughts. We'll chat to you again soon. Have a good day.